I'm just going to guide you on how to spot your trading range. Very easy. So basically, a lot of you were taught market structure using this whole line, chart kind of thing, like higher lows, break of structures and all. Well, so I'm here to make it very easy for you guys today. I'm here to show you this whole line thing on the charts. And when I mean on the charts, you're gonna be able to spot it just by looking at the candlesticks, because the candlesticks is what majority of all the traders we use on our trading view charts. So let's jump right into it. So apparently we are looking for a bullish trading range, and what do? We are trying to look for a sweep of structure, a sweep of a low, and a break of a high. Right now we see this sweep of the low and the break of a high, right? So we are kind of like, maybe for those of us that use the fib levels, we want to do from high to low and look for our entry around somewhere here, right? That's fine, that's very fine, but that's not where we are going to today. Today we are going to talk about how do you know that this trading range has formed just by looking at the candlestick. And that is where we come to this part here, right? So I'm not using candles, I'm not using the color, the red and blue, like everyone knows, man. I'm just trying to show you this because that doesn't really matter if it's red, if it's blue, right? From observation and experience. So basically, if you see a candle like this, right, and our next candle comes to, let's call this candle 2. Candle 2 comes and takes out the low and closes above the previous candle high, right? Automatically on your lower time frame, you're going to have something like this, where you can now see this move, swing high and swing low, right? So now you now have your market range where you can draw your fib level from and take your trade from anywhere around there. Good. Or look for a POI and take your trades, right? So this is a bullish scenario, and now let's talk about the bearish scenario. The same thing goes on. We have candle 1. After candle 1 has formed, we wait for candle 2. If candle 2 takes out the high and closes below the low of candle 1, we know that we have what? This trading range. Now you can draw your fib from swing high to swing low. By the way, this has to be on your lower time frame. This has to be on your lower time frame as well. So let's dive down to the second type, because that's type 1. Now we have type 2, right? So in type 2, we are going to be introducing the inducement, right? Which most of us we use as well. We wait for inducement, also known as liquidity, right? For us before entering a trade. Now in type 2, we have the bullish scenario where we have the sweep and the break of structure, and what's next? We wait for the third candle. So in this case, we have 3 candles. We have candle 1, 2, and now we're waiting for candle 3. Now candle 3 we come and form a low, a candle low, and close. It could either close above it, above candle 2, or below candle 2, or right, it could either close below candles 2 candles high, or either below, right? But then all you need is the low, right? So there might be a form of order block around here. It could either be a fair value gap, whatever POI you use, and all you're waiting for is for the next candle to open, tap into here, and continue going up, right? So this is how you now understand your trading range. For those of you that use fib as well, you already have that trading range, swing high, swing low, and you put your stuff and take a trade from your 7.5 or whatever level you want to take trades from. Now that's the bullish scenario. Let's go to the bearish scenario. Just the same thing, vice versa. This time around, you're waiting for the second candle to sweep candle 1's high and close below candle 1's low, right? And then you wait for candle 3 to finish forming. You can either close above or below candles 2, and you have your inducement, also known as your liquidity. And for those of you that you are using the order block as your POI, you look for an order block on the lower time frame, and you wait for price, which is the next candle, to tap into their sweeping candle 3 lows, high in this case, and then go bearish. So this is just a diagram presentation to show you this. I'm going to dive into the live chart to show you how it looks on the chart, right? So we're on the live chart, and in this live chart we're going to be using BTC for our example, right? I only trade BTC actually though. So I'm going to say 2 things here, right? Because the one I showed you was the diagram presentation, but now we are on the live chart, and on the live chart it's going to get real, right? So on the live chart we now have candles and the colors and whatnot, and then also the type of candles, right? So the candles doesn't really matter, right? The only thing you want to see is candle 1 being swept, right, and candle 2 breaking above. So I'm going to do a replay here. I'm going to do a replay here for us to see, so we can understand. Very easy. And also it's going to be a little bit confusing for most of you. So I'm using the 1 hour because this can happen on any time frame. If you're a scalper, you want to use the 1 hour, but I'm using the 1 hour to just show you this. You can use the 4 hour, you can use the 1 day, you can use the 1 month, you can use the weekly, whatever you want to use. But in this case, since I scalp, I used the 1 hour to check for this candle pattern. So apparently we can see that price was bullish, and then price took out candle 1. Here we didn't have anything, until here we saw the price has taken out candle 1's low and closed above. Now jump into the lower time frame. Right, for me, I use the 1 minute as the lower time frame. What do you have here? Right now, I'm going to come with the line to show you what we have. We have this, and we have this is candle 1's high, right? Sorry. So we have this. Where is the open of this candle? Around here. This is low. So we have this, and now the new candle opens, right, and breaks above the high. Now we have this. Now guess what? This is the second candle, and this is the low of the candle. You can see. Now in this case we have our inducement, and what are we waiting for? We are waiting for next candle to come, tap into here, and keep going up. In this case, it wasn't the second candle. It wasn't the fourth candle, right? It took a lot of time because price had to range above, which made this zone strong. Now on the lower time frame, we have this. All you need to now do is set your trade, put your stop below this protected low, do your 1 to 2 or 1 to 3. And also for you guys that use fib levels, now you have your fib level from here to here. Mind you, do not use this next candle for your fib level. I don't know if you can use it, but you can backtest, try and see. But for me, this is now my fib level if I use fib, and I'll play price for you to see right now. So what happened here? We waited for price to come and tap into this level and let the market do its thing. Remember that you do not have control over the market. The market will do whatever it wants to do. All you need to do is stick to your rules, stick to your trading plan, and be disciplined. Use the right proper risk management, and you're good to go. So in this case, what happened here? You can see we tapped into the fib level, also tapped into the other block we had on the smaller time frame. And what's happening? You can see that price is now moving in our direction, and we have to take profits. There are more examples, and I'm going to do that in another video. You can go and backtest this. This is not trading advice that you should use. I'm not forcing anyone to use this. All I'm saying is you can backtest this, learn this, follow this model, use it. If you take stop loss, keep doing it. Take 100 trades with this, backtest 100 live trades, or use whatever you want to use to backtest. Get this right, and happy trading. Thank you very much for watching. Like, share, and follow for more.